What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as this is what I do, dropping weekly info to help you out. I am looking here shortly to be adding other videos as well, as I want to cover specific events, whether that's evolved around earnings statements or specific events that are affecting the economy. So just some new things I want to potentially start on this channel. So that sounds like something you are interested in. Remember to subscribe to get more information on the economy. So, with that being said, what has been going on? It's been a pretty wild week. And I'm going to go ahead and throw this up there before I even get started here. As something I've talked about up to this point, and kind of the thesis that is morphed in what is currently going on. I've talked about having a final stage and kind of what we're going through. We've fought inflation. We've quote unquote defeated inflation. Whether that's true or not, time will only tell. Ultimately, we still have a lot of services inflation, which is true. As you know, we have the rapid pace of inflation. What's going to happen is that services will raise their prices to compensate for that, and then ultimately understand that they don't just start lowering that price again at this point. So at this point, what the Fed is trying to do, this is my opinion, is they are trying to get more companies to buckle, to lay off, to prevent demand to diminish, as the consumer is pretty beat up at this point from what we've seen and what we continue to see. Is a lot of people are, a lot of things are just at bad times. People still just trying to pay for essentially their current mortgage and to pay for food for their family. And outside of that, yes, inflation has come down, but again, it's still very expensive. If you own a home, all the fees that you have to pay, whether that's for taxes or for whatever else is the case. So, with that being said, ultimately, where that puts us now is the banks are backstop, right? We've seen that the banks are starting to fold, they've buckled. And so, essentially, to try to help and prevent any more failures of banks, which we will still see failures at these higher rates, but it's again trying to prolong the banks from breaking, because ultimately what they're trying to do is make corporations to break and buckle and collapse, so that way people get laid off and then people have to essentially drain all their life savings to stay essentially above where they're currently at, or just straight on par for what they're currently at. Again, a lot of people are working multiple jobs just to stay on par with what's currently going on, and accepting the fact that they won't be able to be homeowners at this point, because again, the limited supply on homes is very, very low. And so people are still price gouging beyond belief to be able to hopefully take some of that money and put a down payment on some other shorted supply of homes, or perhaps just rent until this thing kind of blows over. Again, we are coming off this week. We are getting more insight into that. We've had all bank earnings. Again, we're seeing a lot of revenues taking huge hits. And with that being said, Tesla was a big one. We've seen that a lot with the banks. Of course, a lot of banks are going to absorb that. Plus, they get a backstop. Plus, you don't know a lot of their records, right? There are a lot of the records that are private that they haven't brought their books to market. You don't know what the true story is, and I'm sure it is very nasty. And that's why, again, the public's not exposed to those books because of that fact. Now, there's been a lot of debate about trying to make that public. The public isn't, they aren't going to just show those books, because they are very much on the water, and people will be extremely fearful if they actually knew what was going on with these banks. And with that being said, we are seeing exposure for these other companies. Now, the past week we did have Tesla earnings, and it gave great insight. Yes, they are essentially trying to expand more, but ultimately understand what is going on is that they've lost about $1 billion in free cash flow. And so what's happening is, because a lot of these loans that are coming in maturity, or new loans that they need to get for growth, these companies are going to dip in their own piggy bank before they go for these loans that are extremely expensive. And you have to understand that a lot of startups and a lot of these other companies that are just trying to get off the ground, that are more established, like your Microsofts, Apples, and Googles, they are in trouble because they don't have a big piggy bank like that to just pull. They still need bank loans. And so over the next couple of weeks, you're going to see a lot of that exposure. And this is what's going to essentially collapse the market and get a potentially higher um, unemployment is what we're looking for to kill demand so the Fed can stop decreasing rates or slashing rates. You have to understand the Fed will keep the rates here until it gets what it needs, is a more of a collapse in the economy to where essentially it kills demand. And if that happens, then they start lowering rates. The fact that they are talking about raising rates another 25%, if inflation has completely gone away, why are they raising rates again, or even talking about that? And so coming into this week, that is one of the biggest events we have during the week. So we have interest rate policies. We will have new interest rates on Wednesday. That's at 2 p.m. Eastern Standard Time. And then we'll get Powell fielding questions right after that. Then we have PCE on Friday. Again, the biggest event will be on Wednesday, obviously, with what's going on the rates. People were expecting that it would be a pause, but now it's looking like maybe it's not. Maybe we'll just increase another 25 points. If that's the case, they are still potentially talking about another 25-point basis move. Again, there's a lot of revisions off the data, so you can't just go off the data. And so they are trying to pull the wool over everybody's eyes in hopes that they can fix it before problems get worse. Problem is you can't fix these things, right? If everybody's talking about a bull market, and people are starting to talk about, ever since we had that downslide last week, yes, there's like a couple trillion that came off the books on Friday. Plus you have rebalancing going on. And so people are blaming this thing on rebalancing. You think this is a rebalance? Sure, fine, whatever you want to call it. Ultimately, understand there is some massive selling going on. If you get this week, you get a lot of earnings, a lot like Tesla. Again, you have to understand Tesla is an industry leader. And if they are hurting, again, you have to understand from their perspective, 80% of companies are hitting expectations. What kind of trash is that? Right? A lot of these companies, they've lowered the bar so low that if they barely make par, that they are blowing this out of proportion, that, oh, they're doing fantastic. You have to understand, over the past couple quarters, there's been huge declines. In Q4, we've had from profits about a 4% drop. And then in Q1 of this year, we had about a 2% drop. And now we're at the pace of potentially a 7% drop in profits in these corporations. Now we've moved from the banks into corporations. This is where we need to see the true stages start happening in essentially the crushing of the companies, so that they start laying off to kill demand. And this is what quantitative tightening is about. And so again, you're not going to see them start cutting rates until things are really, really bad, until that demand is diminished so bad that they are essentially forced to have to cut rates. And they obviously don't feel it's that way because of the fact that they are still increasing rates, and people thought we were pausing. And so there's a lot of different things that could be potentially playing into the sell. We haven't priced in a recession. When that happens, things could get nasty. And I still believe in that case that we will still have one more big downfall, or that essentially price in of a recession before this thing has it. I do believe there'll be a huge boom cycle after this. I 100% agree with that. But you have to let a recession get pressed in, because people are talking about a soft landing. And again, these algorithms are working off of headline news, and everybody knows about these headline news. This is why they put expectations so low. So when they miss, the algorithm's like, well, I can't tell the difference anyway, so it doesn't matter because I'm just going to go off of headline news. They beat expectations. So that's positive in my mind. So I'm just going to start buying. Right? There's no logic aside from what's programmed into them. So you have to be mindful of these things and the ways these things are working. None of this makes sense. I still believe that big price in of a recession will happen at some point here. And I do believe Q3 will be the worst of it, which we're currently in, and we won't see those results till Q4. So with that being said, we have to get through the season and see what comes. I mean, October could be a really nasty October. You have to keep that in mind, and I think that's kind of what we're looking at. The way the time frame is shifting. Again, this final stage is playing out. Now it's all about interest rates affecting companies. This needs to shake out and start seeing recessionary numbers and layoffs start to happen, and then that at that point it's going to be a problem. And so again, we have to see where we go from here. So again, we got a big uh, Powell with monetary policy on Wednesday. That's what we're looking at there. Upcoming earnings. This is something that's really interesting in my opinion here. Something I've been talking about is that they are shifting the companies now because, again, everything's very strategically placed. I talked about banks being on a Friday in case something really bad happens, they can take it into the weekend. Then you have them trying to test the waters, leading with Netflix and Tesla on big tech. Now this week they've pulled not only Apple, because remember last earnings cycle I talked about this, they pulled Apple into the last, like I think it was the last monetary policy on the last earnings cycle, and they didn't want them to report until like dead last until they got like inflation report and all that stuff. Now they've also pulled Amazon out this week. So normally this would be a huge Super Bowl week where you had essentially Meta, Microsoft, Google, Apple, Amazon. Well, now they've pulled Amazon out, and so now they're pulling Amazon and Apple out, and they won't be reporting until the 8th. So that being said, it's just very funny the way things are going. So there is a lot of earnings this week. Tuesday is going to be a big week. We do have Amazon, Apple, or excuse me, we do have Microsoft, Google, Snap. Texas Instruments. There's just a lot of good earnings on Tuesday. That'll give us a lot of good insight. Then on Wednesday, some big ones being BA and Meta. Again, these are just ones I am watching because they're industry leaders and kind of seeing what they do and the impact that they have on the market. Again, especially our big seven are big ones we want to be paying attention to. Any kind of AI news that comes out, those type of things. And that's something also that Elon had brought up over this earnings call, is that things are looking really bleak, and he sees a decline in what's currently going on. And if you haven't noticed, when we go over Tesla's chart, it normally bounces. Even if it does bad, it bounces, and it hasn't even bounced. Now you can blame that on rebalancing, whatever you want. I don't think that's a rebalance. I think people are starting to see recession type numbers. And so with that being said, we're going to see really how the impact it does have moving forward. So keep that in mind. Again, I think there's a lot more going on. That's what's being said and being portrayed. You have to understand that. So this week on the watch list, some price movements. So if you've noticed, SPX, since last week we talked about, that's ticked up a little bit. It's still not really crazy because we're kind of expecting the monetary policy. It's going to come in. Again, monetary policies, inflations are losing its impact on the market, right? The market's already done with inflation. They've already essentially deemed it as being defeated unless it comes back. They've gotten the reports to where they want them at this point. So you have to keep that in mind. So if there is a specific report that comes out that is way off from what they're expecting or jumps up all of a sudden, that's going to crush the market single-handedly. So these are things you have to keep in mind. And this is why I say you have to be dynamic, because it's been changed. The market gets numb to some information. Once it becomes numb, if there's anything dramatically way outside of that, then that's when it starts really affecting the market and causing some big downfalls. So again, SPX, it's not like I talked about when we've talked about other monetary policies. It's even been up to like 120 trying to be priced in. So they are expecting some movement this week, but not huge on the SPX. And normally, if you have a big event, economic event like monetary policy, SPX will move a lot during that time. Individual stocks will come down. Tesla has come way down since last earnings. I think it was roughly around 20 something last week. Now it's down to 15. BA is up big. You normally don't see BA up this big, but it's up to 11. It normally floats around that 6, 7. It hardly moves from 6 or 7, but it's up at 11, which is saying a lot. So there's going to be a lot of value plays this week. You do have McDonald's on deck too. I don't really put those up here, but you have a lot of big values that are going on this week, and that could have a huge impact. So you are seeing some bigger price ins for value stocks. And JPM, roughly 3. Again, it doesn't really price in a lot. It's not expecting a lot, but we'll see. So with that being said, let's take a look at some charts here. Again, this thing's been on a massive rip. You could have said that this thing has, since March, essentially been in earnings mode since March, since all essentially of Q3 or Q2 here. It's been like a massively ripping coming into essentially this earnings cycle, and then this could be the bad earnings cycle that sets us off. And something I've talked about again, if people want liquidity to go to make a move to the opposite direction, you break that, because if you want to look at this on a monthly chart here real quick, if you want to essentially break this range, you break up, get liquidity, and then you get your next move down. We haven't made a new high. This is something to keep in mind. If we start selling off, that would be a lower high. I've seen this exact move play out during the pandemic. When that happened, when this happened here, you had this massive sell off, you had this massive push up. People thought we were going back to all time highs, and then just ripped down. I mean, that was in a month, right? That was like in a month. Two huge candles, limit down, limit down, and limit down. Is that going to happen here? It's going to be a recession. I don't think it's going to be straight down. I think we're going to get more of this choppy nastiness down for a recession. Or will we make a new low is a question. I don't know how that's going to play out. I think we will come down quite a bit. But again, I think once we do make this final turn down, I think we're going to have a massive rip out of here. So we'll have to see. Again, anything is possible. It could be a rebalance, and we might just start ripping at this point. Something I have talked about is that we do have a yield curve inversion, and it's been very accurate. One of the few things that have been accurate. You have to again understand that that doesn't essentially pricing in recession doesn't happen until you start cutting. And so that at that point, when you start cutting, things are like so bad. There's so much bad new news that comes out that the market starts to really rumble after that fact. So again, you have to remember back in 2008 when that happened, it took several years, and they held rates, and that's what the Fed will do. They will just hold rates until they get something to absolutely fold and crash. They will be up at this, if not even more. They may continue to keep pushing it, and you may have, and I think that's why a lot of people are still buying homes right now, even at 7%, because they're afraid it could go to 10. And JP Morgan's talked about this. The CEO has talked about this, about potentially seeing a 10% interest rates on homes. So these are things you have to keep in mind. So again, there's still a lot going on. I want to see what happens here, but again, very, very overextended. I think the earnings run could have potentially happened right here. These last 2 months could have been massive earnings push, a lot of FOMO going on there. Very much a possibility, especially, again, very much so on tech. Everything else has been kind of just dead in the water. If there is a lot more strength that comes in financials, if there is a lot more strength that comes in a value, that could be different. We could be in a new bull market as of right now. I think you're still jumping the gun because you still need other pieces of the puzzle to play out. But again, also understand that because of the yield curve inversion, the market will push up a couple months after a quote unquote pause. And we don't know if we've paused. We're talking about another rate raise this week. So we haven't officially technically paused, and they're still talking about potentially another 25-point basis move. So we don't know until they actually pause. The market will continue to push up until it gets that pause, and then it starts slashing rates. And again, that all happens at a faster rate because then you're like, well, we've way overcompensated for inflation, and then everything just absolutely got crushed. So again, we're dealing with a 40% money supply print. You're going to get bigger moves, and so just keep that in mind. And this very, very big overextension is really showing that. Now it's going to be the end of the year. It's going to be next year. We're not really sure when that's going to happen, but it's going to come at some point, that pricing in a recession. So with that being said, we will see here. But as far, we still got a ways. We pulled back a little bit at that 4,600 mark. Once we hit that 4,600 mark, we pulled back a little bit. Again, all-time high is sitting in that 48.18. Will we make it there by the end of the year? We're going to have to see how these earnings play out. If we get really bad earnings and showing recession numbers, that may be the thing that tells the Fed to lay off rates. I mean, we don't really know. We're going to have to see how this thing does play out. Maybe it's pushed until we get Apple and Amazon on the next monetary policy before we really find out if there was a pause or not. Again, there's too many things in play here that you don't know for sure. But the market will continue to push up and continue to not make sense. until something breaks, because that's what the Fed is waiting on, is for something to break to start cutting rates. Will that be next year? Nobody knows. I thought it would have been roughly around this time in July. But again, we'll have to see. I still think Q3 was going to be the worst, and then we'll go from there. So again, you have to be adjustable. Like I've said, I've started playing a lot of the upside, and just watch my risk, because buying at these tops, if we do pull back, we don't know how much that pullback is going to be. It's a great time to buy on the pullbacks, but we don't know again when that's going to happen. So that's what we got in SPX. Bitcoin, interesting enough, has dropped back below that 30K mark. We'll see if this thing starts selling off of the market again. I still don't believe we've hit a low. Again, that's just my gut feeling, is that we're still needing pricing a recession. Once that happens, then we can have a huge boom cycle after that. But again, we'll have to see. Again, the XRP thing really saved it here. But the question is, the market doesn't want it to go past that essentially that 32K mark. So again, something we have to really keep an eye on there. Tesla. Now Tesla's, like I said, our earnings just sell off. It's very rare Tesla has earnings and just starts selling off and has absolutely no strength in it. So my opinion is this thing could potentially start going down. I really want to start gobbling up shares roughly around that 220. And then anything lower than that pretty much is kind of what I'm looking at. We'll see. Again, it hasn't reached all-time highs. It's come close, but it definitely has not. All-time highs is still sitting up there. I called this play out here that this would be pretty bad at this 303. It could come down to the 230 here. Like I've always talked about, you get a break, retest, and then we could potentially skyrocket. Maybe that's all we get, is a drop down to the 220. But we'll have to see. Again, it's still a higher low compared to all-time highs, so it could potentially start selling off even more. We don't know, and potentially making a newer low, but just below 100. We're not really sure. Again, we will have to see. But again, buying up here at the top is something you need to wait for and see how it does play out. So really watching this week. Again, I'm kind of watching that 230, seeing how the market holds there. Something I've talked about during these earnings cycles, like the next 2 to 3 to 4 weeks after an earnings cycle is normally a sell-off period anyway for the stock. You kind of just let it go. Then it'll consolidate and ramp up for the next earnings cycle. So on this pullback with Tesla, I really want to kind of see where it starts to stagger and hesitate and start buying shares around that point. And if it sells lower, then buy some lower as it on these different levels as it starts pulling back more, if that's the case, or we start pricing in a recession. So just keep that in mind. Palantir. Looking for a pullback to the 13 here coming up against some very strong sell pressure coming in. This thing does not want to push up over it hit 19 at one point this week, but it's pulled back pretty far since then. We'll see if it can hold roughly around here around that 13 mark. I'd really like it lower, but we'll definitely have to see if that's the case or not moving forward. So keeping an eye on that one. We have Meta, which I don't typically talk about. This is something I want to kind of watch here to see if we can get a pullback to the 224. Could be a strong potential entry here. Again, I want to see how the market sentiment is if we do hit this section here. Again, with threads and everything else that's going on, Meta is kind of, the fact that it just ran up like this is absolutely absurd. This is asking for a crash. This massive move that it's had right here kind of made recoupled essentially with what this move was for that heavy sell side on Meta. So we'll see what happens there. Just keep that on watch. Google this week, same scenario. We want to see if it can hold the 105. If it can, it could be potentially starting to move back up, kind of like this move where it pulls back and then it kind of really rips. So kind of looking for a pullback and potentially really rip here. So you want to call it a rebalance, whatever the case is, and needs a healthy pullback for this thing to continue up. Also, it is a higher low, so if this thing just starts to sell and it can't hold this level and breaks, this thing could very well be going to new lows. So there's something you got to watch, and you got to be constantly on your toes for. And to think that it's just going to be black and white one way or the other, the markets don't work like that. If you think coming into the market that it's going to be like that, it is absolutely not like that. You have to be adjustable. You have to know what the market sentiment is. You have to know what current events are going on. And reading between the lines is a huge help. Plus, technicals help a lot as well. There are times when you can just forget a lot of the macro stuff and just pay attention to technicals. There are times when you just forget the technicals and it completely just works off of event driven. Events do play huge. This is why I like playing momentum on events. They do have a lot bigger moves. And so that's where I like to concentrate any kind of like scalping or anything that I do. When it comes to bigger swings, I like 52-week low kind of things, massive declines in stocks that are good quality stocks, and then buying those and writing those back up. I think that's definitely a plus there. BA is another big one that's got earnings this week. Again, it hasn't broken out. This thing has really struggled. It still cannot break this. We've talked about this 220 level forever. And we've also talked about this 191 level. Just continue to watch those. If this thing actually starts to break up or down, I think that will really tell you where the market's going, especially with BA. That's why I like to keep bringing up BA. JP Morgan, obviously, it's going to continue to break out. This thing is absurd in a lot of aspects because of the fact that, again, it's got all the deposits, right? It's got a ton of money. It's got huge market share. Of course, it's going to break out. It still has gaps it needs to fill. At what point will that happen? We don't know. We priced in recession. This thing could just start selling off heavy. Inflation come back. This thing could just start selling heavy. Another big thing is, a lot of these banks don't have to hold any amount of money or excess to replenish people. And that thing has been going on since essentially the pandemic. And now it's like, okay, well, you need to have reserves on hand. That could be a big problem. But right now you're also dealing with a banking crisis. So that's something else you got to keep in mind. You have to also keep in mind that even though the Fed is, or the government isn't supposed to be spending money, it is spending billions of dollars, and massive amounts of money have been continuing to flow into Ukraine. For what reason? For the war. When you have, a lot of their top officials with these big old fancy houses, $1 million homes, yeah, things look pretty grand over there. And then, you look at our streets and cities and, what is going on, right? Like, who are we really helping here? So, again, not going to get into a conspiracy theory here, but we'll see what happens. I mean, it's another big week. We'll get some good earnings to kind of digest what's really going on. And then again, we're still looking for Apple and Amazon after that, but we will get Apple, Google, and Meta, and those are the big three we're kind of really watching. It's a big chunk of the big seven that we really want to watch, and that's probably why the big seven has been so spread out, because of that fact, because of the impact it could have on the market. And NVIDIA is another big one we need to be watching for, and to see if these big numbers, these 10x numbers they're talking about, are actually legitimate or they are not. So with that being said, if you have watched this far, I do appreciate you. Go ahead and drop a like, comments, what you're looking at, what you're thinking, what's your thesis. I'd love to know what you guys think and where your mind is at for the upcoming week. So with that being said, have a good one, and I'll see you guys on the next one.